The Consumer Financial Protection Bureau, or CFPB, is a government agency. It was created in 2010 after the financial crisis. Its main goal is to protect consumers from unfair practices by financial institutions. The CFPB has the power to create and enforce rules for financial products and services. These products include mortgages, credit cards, and student loans. The CFPB also provides educational resources to consumers. These resources help people make informed decisions about their money. The CFPB plays a crucial role in ensuring fairness and transparency in the financial marketplace. The CFPB has returned billions of dollars to consumers harmed by illegal practices. It has also brought enforcement actions against major financial institutions. These actions hold companies accountable for their actions. The CFPB's work helps to create a safer and more equitable financial system for all. In recent years, the CFPB has undergone significant changes. These changes have raised concerns among consumer advocates. One significant change is the appointment of new leadership. The new leadership has signaled a more hands-off approach to regulation. This approach has resulted in fewer enforcement actions against financial institutions. Another change is a shift in focus away from protecting consumers and towards promoting business growth. This shift has led to concerns that the CFPB is no longer fulfilling its intended purpose. Critics argue that these changes weaken the CFPB's ability to protect consumers. They worry that these changes will create an environment where predatory lending can thrive. They also point to the reduction in fines and penalties imposed on financial institutions as evidence of a more lenient approach. The 2008 financial crisis was a stark reminder of what can happen when lending practices are not carefully monitored. The crisis was triggered by a combination of factors. These factors included lax lending standards, the proliferation of subprime mortgages, and the rise of complex financial instruments. As a result, many borrowers found themselves unable to repay their mortgages. This inability to repay led to a wave of foreclosures and a collapse in the housing market. The crisis had a devastating impact on the global economy, leading to job losses, business failures, and a loss of trillions of dollars in wealth. Section 4. Safeguards in place, lessons learned from the crisis. Following the 2008 financial crisis, significant steps were taken to prevent a similar event from happening again. The Dodd-Frank Wall Street Reform and Consumer Protection Act, passed in 2010, introduced sweeping reforms to the financial industry. These reforms include stricter lending standards, increased capital requirements for banks, and the creation of the CFPB. These measures are designed to promote transparency, accountability, and responsibility within the financial system. Section 5. Expert voices concerns about a weakened CFPB. Many experts have expressed concerns about the potential consequences of a weakened CFPB. They argue that a less aggressive CFPB could lead to a resurgence in risky lending practices. These practices could lead to another financial crisis. They also worry that consumers will be left vulnerable to predatory lending and other forms of financial abuse. These experts believe that a strong and active CFPB is essential for protecting consumers and maintaining a stable financial system. Section 6. Protecting yourself. Tips for savvy borrowing. In a changing regulatory landscape, it is more important than ever for consumers to be proactive in protecting themselves from predatory lending practices. Here are some tips for savvy borrowing. First, shop around and compare loan offers. Don't just accept the first loan offer you receive. Compare interest rates, fees, and terms from multiple lenders to ensure you are getting the best deal. Second, read the fine print. Before signing any loan documents, read all the terms and conditions carefully. Pay close attention to interest rates, fees, and repayment terms. Third, ask questions. Don't be afraid to ask your lender questions about anything you don't understand. A reputable lender should be happy to answer your questions and address any concerns you may have. Finally, seek financial advice. If you are unsure about a loan offer or need help understanding your financial options, consider seeking advice from a qualified financial advisor. By following these tips, you can help protect yourself from predatory lending practices and make informed financial decisions. Section 7. The road ahead. Consumer protection in a changing landscape. The future of consumer protection in the financial sector remains uncertain. While the CFPB has played a significant role in protecting consumers since its inception, recent changes have raised concerns about its ability to continue doing so effectively. The debate over the CFPB's role and authority is likely to continue. The outcome of this debate will have significant implications for consumers and the financial industry as a whole. It is crucial for consumers